Hi guys, welcome to Gold Price Daily Analysis. Today is Friday, 14th of June 2019. This video is brought to you by the coach. Remember always our job is to make you rich. If you are a new subscriber, welcome aboard and thank you for joining us. If not yet, please hit the subscribe button. I do urge you to check out the description of this video for the link for the Telegram room. At times when there are important updates or trading opportunities, we could reach to you through the Telegram. Also, I do urge you to check out our last two videos in order for you to get the best of this video. We are going to start our analysis right after a quick recap. On the last trading session of Thursday, we have been waiting for important economic headers to be released from the United States. We will start with the initial jobless claims and continuing jobless claims. Both came above forecast, bad for the dollar. The imports price index month-to-month for May came below forecast, and the exports price index month-to-month for May came below forecast. All the data in general were against the dollar. For the price action of gold in the last trading session of Wednesday, gold started the day on a positive tone. Gold benefited of its safe haven quality and competed with the US dollar. Actually, it capped the US dollar in terms of the demand, and gold indeed benefited of the oil tankers incident today. That's all. We will be moving now to the strategy recap. In our last episode, we advised buying gold about 1,332 to 1,335. As we have noticed continuous rejections from 1,338, we gave our neutral outlook that either you close your position with little profit or you wait depending on your risk tolerance and financial capacity. You do have to understand one thing, that my job is to make you money, even $1. So at times when the signs of weakness appears, I leave the things for your personal judgment and your capacity to handle risks. That's all for the strategy recap. We'll be moving now to the economic calendar. On the economic calendar for Friday, we will be waiting for the following economic headers to be released from the United States: the retail sales month-to-month for May, the core retail sales month-to-month for May, Michigan consumer sentiment and Michigan consumer expectations, and the industrial production. All to be considered as market movers. That's all for the economic calendar. We will be moving now to the technical indicators. In the last trading session of Thursday, we have had a trading range from 1,332 to 1,343. Numbers are rounded and the market is still opened. For the gold spot closing price, gold spot is expected to print a close price above 1,341. The number is rounded and the market is still open, and you got to watch for it because it has to close above 1,340 if we are looking for the highs of the of 2019. For the daily simple moving averages, 20 days 1,302, for the 50 days 1,290, and for the 100 days 1,299, and for the 200 days is 1,265. Gold is trading in a bull trend above its daily simple moving averages. For the RSI 1 hour it's 69 bullish, and for the RSI 4 hours it's 66 bullish smooth, and for the RSI 1 day it's overbought 72. We are still in a good bullish setup. For the supports and resistance, the first support gold should find about 1,337. This is a very tough support, followed by 1,328 and then 1,320. This is extremely tough support. For the resistance, it's 1,346 should be the harder. Then 1,355 and 1,365 is the toughest. Now we'll move on to the trading strategy. Technically, gold is trading in a bull trend above its daily simple moving averages. The RSI readings in the one-day chart pointing to overbought. Gold price from a pure technical standpoint has no reason to decline anymore. Worth to mention that overbought, as it indicates that a correction could take place, it also indicates that the demand is exceeding the supply, which is a strength sign of the dominant trend, which we have it right now. It's a bull trend in the gold market. For the fundamentals and sentiment, markets were affected indeed by the oil tankers incident, and the safe haven demand increased as of possibility of consequences to take place. And actually the market favored the gold on the US dollar. Add to that the market attention is right now in the FOMC meeting due next week from 18 to 19 of June. And the market will be looking for any clue about the Fed's next move with regard to the interest rates. As we said, the market attention right now is focused on the FOMC meeting, and it's like buy the rumor, sell the fact. The market already bought the rumor, which is the hopes of a rate cut, and the market priced already 2 rate cuts, one due or priced in July. The logic says that everything priced against the dollar is going to edge higher as we close to 18-19 of the coming week. For the trading idea, we are not going to issue a trading signal for today, but for the some of you who is still in the buy, what we can say that gold, as gold spot at is closed above 1,340. It indicates that 1,346, 1,348 is back into the range. Most likely will be cleared by tomorrow, with the possibility of printing a new high. You can also use 1,337 as a better stop loss, because this level is totally protected. If gold exceeded 1,348, don't sell it. Don't think of shorting it. Gold is then going to 1,370. Thank you guys for watching this video. That's all for today. Please share, like, and subscribe, and I'll see you tomorrow in another video.